Welcome back. You're still tuned into Market Fatafat right here on ET Now. And let's now put the spotlight on Aequs. We have the management joining us on the show. Mr. Aravind Melligeri, Executive Chairperson and CEO at Aequs, is joining us from the IIFL Capital Entrepreneurial India 17th Global Investors Conference. Thank you so much for taking your time out and joining us here on ET Now. Ashesha this side. You've announced a whole host of measures, and you've also signed an MOU of late with the government of Tamil Nadu and have approved a further investment of 230 crore in your subsidiary. First up, let's talk about your investment in the subsidiary. It is for debt repayment and new capex. If you can split that for us, how much is it for capex, how much is it for new investment, and what is the investment in subsidiary for?
It's predominantly focused on the investment is focused on our consumer electronics area. It's a subsidiary where we are investing to pay down the debt. That was the purpose of our IPO, and also ability to do some more capex in there. So that's pretty much a planned activity which was published earlier as a part of our IPO process. And as you know, we have invested over 600 crore in the consumer electronics over the last 24 months, and we continue to expand that vertical activities as we are going forward.
Right. Hi, so this is Ankita also joining in. Now, within aerospace, the order book of $814 million US as of January 2026, what is the expected revenue realization timeline for you?
Typically, our contracts are aerospace contracts are anywhere between 5 to 7 years, and that's pretty much everything is realized. That's during that period of time. The contractual is $814 million could be somewhere between anywhere between 24 months to 7 years period. So average, I would say 3 to 5 year for 4-year period is what I would say the period of contract is, and the order book is.
Understood. Mr. Melligeri, also wanted your thoughts on the margin performance. I believe you've given a margin guidance of 20%, and this is for the aerospace segment. But this segment itself generates about 80 to 85% of your total consolidated revenue. A consumer segment is loss-making. Why is that, and do you expect it to turn profitable in the near future?
Yeah, I mean, as I mentioned earlier, we have invested over the last 24 months into this vertical, consumer electronics, especially over 600 crore has been invested, and the utilization is about 31% right now. And as our utilization improves, it has gone up to 31% in the last quarter. As the utilization improves, you'll start seeing the profitability coming into the picture, because it's a significant upfront investment. It's a large commitment we have done because it's a very upcoming and very high growth vertical. We believe we are very well positioned, leveraging our aerospace machining capabilities and component manufacturing capabilities, which is directly applicable to the mechanicals of this consumer electronics industry. And we have high potential of leveraging these capabilities and growing in there. And as our utilization improves, you will start seeing our profitability coming in from consumer electronics vertical. As you mentioned, aerospace is already delivering close to 20% EBITDA, and then we continue to do that as we grew. Last quarter we grew year on year 38% year on year on the aerospace side also. So both the verticals are growing, and obviously consumer is a much smaller base, and it's going to grow very fast in the coming years, and as the utilization improves, and we'll see that profitability coming in the near future.
Right. Mr. Melligeri, also tell us how much of the 650 crores of fresh issue from the IPO has been utilized for debt repayment to date, and what is the target interest coverage ratio for the end of FY26?
It's predominantly was towards the debt repayment. Only about 75 crore was utilized, going to be utilized for capex expansion, and another 75 crore approximately was kept for the strategic initiatives, basically investment in the JVs type of it, and that's what it is. And we'll continue to have some level of working capital debt it's fairly going to be low as we close the year, and we have continued to expand and commit more capital into some of the activities what we are doing. So depending on how it is, it's going to be requirement is going to managed between the equity. We still have some amount 150 crore worth of general corporate purpose funds we have, and then additional funds which will be required. We might decide to do the debt at that point in time. But right now, the plan is to, maximize what we have on the ground. Improve the utilization is the focus right now.
Right. Mr. Melligeri, also wanted your thoughts on the fourth quarter revenue visibility and for FY27 as well. In the last 2 quarters, you have generated revenue of about 600 odd crores. Do you intend to cross that 1200, 1300 crore revenue mark in FY26? And then what will the outlook be for FY27?
Well, as I said, in general guidance we are given is, over 20% growth. What we are aerospace side we are planning, and last quarter we grew 38% year on year, and we see that 30+% growth coming year also. And also same time, consumer electronics, overall consumer business has grown over 100% year on year, and we see a significant growth in a similar range, high 50s. To 100% level, somewhere in that range, we'll see the growth coming in also coming year.
Right. Mr. Melligeri, also you have recently announced your MOU with the government of Tamil Nadu for setting up of a manufacturing unit in the state. How does the demand traction look like? And from all the business segments covering the aerospace and consumer space, from both as well?
Yeah, if you really, what we have established in Belgavi, predominantly this MOU is towards developing an ecosystem for engine components and landing gear and system components. Today, our aerospace ecosystem, what we have in Belgavi, is focused on aerostructures. Obviously, that's quite different, different than what we are trying to do in Tamil Nadu, in the Hosur area. It's more of aero engine focused, and which ecosystem actually lacks in the country today. We are looking to build that over next 10-year period, and that's the investment commitment we have done. And we have customers discussions going on already. We already manufacture engine components in our French facility and also in Belgavi facility, but the growth is going to come into this location where we see that opportunity to build ecosystem. What we have done in Belgavi similar to aerostructures there. So I think with that we feel it's again. In the near term, it's going to be business as usual, but as our next 18 to 24 months, we start industrializing our facilities in Hosur. Engine component activities will continue to grow.
Right. So the outlook is very positive. 20% guidance, growth guidance, and EBITDA margin guidance is what the company is giving, especially for their aerospace business. Mr. Melligeri, thank you so much for taking your time out and joining us here on ET Now from the sidelines of IIFL conference. But shifting